Okay. So we're going to try something slightly different with a panel session on how different subject matter experts within our organization support our sales opportunities with hyperscale. So we talked earlier, we started looking at hyperscale opportunities 3 years ago. For the last 2 years, we have had good traction. We have gotten 7 out of 8 customers. All of that we have talked about. What we'll want to go through the life cycle of a project from site selection, site acquisition, and customer acquisition, and to contract signing. At that point, this gets handed over to Mervin's and Emmeline's delivery and functions. That's a session for later today. So we just talk about the first 3 steps first. Before we commence, maybe our 6 subject matter experts help us introduce yourself quickly, starting with you, Jess.
Hi, everyone. Good afternoon. My name is Jess. I'm leading the hyperscale solution team for all our customers, for the East customers and West customers. So the team, I would say we reformed like Q4 last year. And then now we have a solutions architect, and then we also have technical program manager to help us to manage our RFPs responses better, so that we can have a better collaborations, engagement with our customers, while the rest of the subject matter experts can focus on the SMEs that they are working on. Thank you.
Hey, hi. Hey, hello. Yeah, my name is Yong Wei, so part of the engineering team. So I'm looking after master planning. I work very closely with corporate developments in identifying new sites, site selections, etc. And I also work very closely with sales, SE, in supporting some of the hyperscale deals.
Hi, Patrick Daly, Senior Legal Counsel, leading on hyperscale customer contracting. And I work with Jess and Yongwei and everyone on this panel to make sure the correct terms are in the documents and all of their requirements are reflected.
Hello, Ben Zano. I'm head of finance, so at the moment I'm looking after our treasury function, so that's deployment of equity, debt raising, so we can build these expensive buildings.
Hello, I'm Quentin. I joined since 2021. Senior Director in Commercial Investment Operations. Work closely for Yaniv and a lot of the teams to look at investments of projects and deals in supporting platform fundraising and financing.
Hi, I'm Raphael. I work on the Interconnect program under Yaniv. I make sure that our customers can get all the connectivity they need out of every single data center we have.
Great having you guys with us today. All right, Young, let's start with you. You are responsible for master planning. Can you talk to us with what kind of guidance do you provide with corporate development team on site selection? You'll have detailed specification of our customers, and how does that drive into which land acquisition you'd like us to see doing in the future?
Yeah, sure. Thanks, Yaniv. I think today we are seeing customers are putting a lot more focus on certainty over schedules and certainty over critical resources like power and water during the initial site selection stage. As we all know, AI, ML are driving the demands. Power, water availability are increasingly become a real constraint in many markets. So what really differentiate here is the ability to be able to convince the customers we have this critical resources secured and guaranteed. That can be one of the key differentiators. And the other thing is, this is also where the strength of a local team and local partners comes in. Because with their strong relationships on the ground with utility companies and also with the authorities, these are what often unlock power and water in a difficult market that we are in. So, and we have some pretty good success stories here in Bangkok and also our new campus in Jakarta. So then beyond resources, right, customers also expect a robust TDD, technical due diligence, done on the land itself. Because to them, So I think we wanted to. So customers also expecting assurance. They want to make sure that we have the risk, the major risk, identified and mitigated during the early phase of the design. So to make sure that we keep up with the customer's requirements in terms of the site due diligence, we constantly updates and then on our checklist and requirements to make sure that it remains relevant and is being guided by customers' requirements. We are also seeing some customers are getting more risk averse when it comes to flood exposures. Because, for example, especially I think when we have a data hall on the ground floor, traditionally, many customers are comfortable, when the designs, have taken into consideration of the flood risk of 1 in 100 years. There are few that need like 1 in 500 years. So in one of these recent cases we have is customers is requesting us to raise our finished floor level by another 600s. Even though the design itself already considered the worst case scenario is 1 in 500 years, which is a 0.2% chance occurrence per year. So in summary, right, I think what we think is that during this initial site selection phase, what customers requires from us is the confidence. The confidence that there's a robust technical due diligence done on the site itself. The risks are being managed and mitigated. And more importantly, we have the critical resources like power, water secured. Yeah.
Great, thanks, Young-Hui. Raf, on the topic of site selection, maybe on your side of the business, interconnection and connectivity, how do we think about not only complying with customer requirements on interconnection, but also trying to differentiate when we can our new locations?
So obviously, Digital Edge, we're a data center provider. Space and power, those are obviously very important aspects of what we provide to the customer. But what the customer wants to use that data center for is to process and distribute information to the end users, right? So connectivity is actually a very major part of the whole the solution to the customer. So what we do is during the site selection stage, we make sure that the site has enough connectivity options. So, for example, in Indonesia, Gaia, we spent a very long time with the team to design the PoE extensions to the edge of the park to interconnect with the other providers. We make sure that there are enough roadways to cover diverse paths back down to Jakarta. And we do a lot of study to select and make sure the piece of land can support the connectivity that they need. And, just generally being able to support the business that they intend to run and expand in our data center.
Yeah, thanks, Raf. So moving into site acquisition, maybe Quinton, when we identify a site, we want to go forward and put a proposal to board. What kind of deal-specific metrics do you look for? We have IRR, MOEM, YOC, all sorts of acronyms to confuse everyone. Where is our focus in at, and where do you get your assumptions to build our underwrite models to secure capital and approvals?
Yeah, I think board definitely is a collection of smart minds, and each metric that Yaniv just mentioned, development yield, money on multiple, and IRR are the key financial metrics that the board and senior management team will focus on. So I quickly get a sense of each metric for you guys' reference. Development yield is actually the development profitability that we can achieve. So basically, it's the stabilized net operating income divided by what we built in terms of cost, site acquisition, total build cost, and everything else together. Say, for example, like BKK, if in future we got a 100 megawatt campus, we will do a build cost of 8 million per megawatt, meaning our build cost is 800 million. In future, we got our operating margin and our EBITDA of 80 million. Simple math is a 10% development yield. So how does that compare to? Is it good or bad? So there's a market cap rate. So in the future, we want to exit each market, say for example, a BKK of 5% market cap rate, meaning that the market value of this project worth by your $80 divided by 5% is like 1.6 billion. So you're actually creating a value of almost 800 million compared to your build cost. So this is the first thing that why board will understand this development yield is actually creating value of this project. How do we create a better development yield? Better spread, of course, between the market rate and development yield is the better. So as you see, the first thing is better EBITDA. It's driven by strong revenue and better operating efficiency. So that's, of course, is from sales, getting higher pricing possible, lowest cost possible to operate to get best achievable EBITDA. And of course, the denominator, the CapEx, the lowest cost possible. And of course, the lowest site acquisition possible, lowest premium to our shareholders, our parties. So this is actually a combination of sales, ops, corporate development, and even construction team. So this development yield is already telling us a big part of the story in our investment return mindset. Another quick metric for the money on multiple is actually the equity return we actually put in. So say, for example, like 5 times money on multiple, meaning we invest in $1 equity, we get back $5 back. That comes into a lot of big play for capital structure in here. So back to the 800 million cost that we potentially put in, Ben and JW whacking our banks, getting the best possible leverage that we can borrow 600 million, for example. So we put in 200 million of equity. In future, when we exit, as I mentioned, based on the market cap rate, we get like 1.6 billion of this market value, less the debt we paid down, we get 1 billion of actual equity back to our pocket. Divide by the 200 equity outflow, we get 5 times of MOM. This is actually something that we also look at. And when this translates to a holding period of, say, 7 years, of, say, 5 times in 7 years, or 5 times in a shorter period, the higher the IRR possible. So this is actually 3 combination of financial metric that a board will look at. The first one being, again, development yield on a static play. The second, MOM, on actually the return of your equity, taking into consideration capital structure. And the third one is IR, is depend on the holding period of how the board thinks. So this actually, each of the inputs actually put a big contribution to the whole story of a project. And that's get our board's approval to support expansion of the company. So it's not only one number to my Excel, but it's actually from everyone's input to paint the story to the approval.
Yeah. I guess with the development yield in particular, I guess we'll normally look to calculate that, right through from site selection through to us formalising sort of our contracting costs and then contracting with a customer. So I certainly see Nala and team. There's challenges there where early on we're sort of looking to firm up what that cost is. This is pre sort of us tendering with GCs and whatnot. And Jonathan sort of touched on it earlier as well in terms of setting a realistic but challenging cost around that CapEx base is really important in the process. And I think something we're sort of getting better at. But that development yield in particular is it's really is the key metric that Stone Peak use when they're critiquing us or sort of working through opportunities.
Quick point to add is that we have been de-risking ourselves to more like hyperscaler builds with more like 10%, 15% development yield compared to, say, for example, like Edge 2, TRL7, which is up to 20, 30%. But we're actually de-risking with stronger contracts, longer contract tenure compared to like multi-tenants, which is high development yield. So that's the balance between the de-risking and the yield percentages.
Yep. Thanks, Quinton. Thanks, Ben. Ben, maybe we'll stay with you. At the point of land acquisition post due diligence without a customer contract yet, debt financing not available, then we turn into equity. Maybe you can take us through how our platform thinks about allocating equity across different markets.
Yeah, sure. So I guess for context, I think with the exception of what Ricky was able to achieve in BOM 1, we haven't been able to borrow on what we call a spec basis, pre-customer contracting. So, banks won't finance us generally until we've got that customer contract. But obviously, speed to market's been a key theme that we've been talking about across today, and we just don't have the ability to just wait with a plot of land. So there's a balance in terms of how much equity we sort of put in to front end to reduce increase that speed to market and reduce that sort of that build time between sort of customer contracting and RFS. I think we've got a very, very supportive sponsor in Stonepeak. We track that spec capital that we're putting to use very, very closely. I think through the customer contracting over the last sort of 12 months, we've de-risked a lot of the platform. I think we've worked Yaniv from about 40% spec capital down to sort of sub 20% now, right? So we've got a sponsor that certainly is willing to go on risk. I think they are pretty aggressive, but at the same time, they're custodians of funds from large sovereign wealth funds, right? And so they don't go about this arbitrarily. Like, we have to have a strong business case, a strong commercial case. We have to have strong, the site selection that Yongwei was working through. Right? We have to have conviction in our ability to either get power or having already organised power. And if we tick those boxes, they've been very, very supportive sort of to date. I think the key for me really with the spec capital in particular, Yaniv, is communication and sort of dialogue with Stonepeak, and sort of making sure that we are making them aware of what's in the pipeline, what's coming, so we don't blindside them, right? And so I think if we've I guess the ask there is, construction team, if we think we want a certain sort of piece of long lead equipment ordered or whatnot to hit our RFS, then have that conversation early so that we can start raising it with our supportive shareholder.
Yep. No, thanks, Ben. Maybe just as a PSG, we are still at the stage where we bought land. We don't know which customer is going to go to. So there's actually a lot of design work which is designed to capture as many customers as we can, and also even we start early works, piling, foundations. How is your PSG's team new basis of design structure to cater, to deliver maximum flexibility across all potential customers?
Thanks, Yaniv. Probably let me start with the why we started this initiative. I think the value that we have earned today, it's not just dollar and cents, but the insight from the customers from a technical perspective that shape us better and equip ourselves ready for the next wave of computing technology like AI, ML, and potentially quantum technology, right? So just like AI and machine learning, we need input. We need input from our customers, from our partners, and data processing from all this information, and the training, and obviously the final product that suits our customers. So our customers are not building for now, but they are building for the future. This is why any ex-Amazonian here. So we're living with the AWS leadership principle, customer obsessions, right? We are working backwards from our customers. Like Yaniv mentioned, the first thing on the sea itself is the customers. So from customers, we are getting the input and the output from ourselves, the collaborations during the engagement, technical workshops, and many, many more. Communications internally and externally, not just within digital age, but we have our partners, our vendors, our supply chain, and to achieve the consistency throughout the platform and our customers. Our customers see us not as digital age, Korea, India, and so on. No, they are viewing us as digital age as a whole for all the platform. This is just not within us and our customers, but also our partners, like our GC, our consultants, and the rest of the supply chain. Fast growing for our customer means rapid rapid change of technical requirements from our customers that we will need to embrace that, right? So today, RFP, it may not be applied for the RFP for the next 3 to 6 months. It changes, and we need to adapt to it and embrace on it. Right? To give you a perspective, I think this is what Yongwei and I that are facing with the customer is that the RFP they're working on for ByteDance, like Q3, Q4 last year, it may not be applicable for today, right? They will require a more larger supercar room with liquid cool ready and so on and so forth, right? And to compare with what we have yesterday, it's very differently, right? Today, we are talking about liquid cooling and so on. So as a result, right, the changes that we have learning from our customers, and then we have applied into our basis of design, right? Like, for example, our data centers are ready for Mac 3 power distribution systems to support the GB200, 300 TPUs and so on. And then we also can customize for AWS their required M+2C that they have their own CDE formats of 3.6, for example, for now, right? So not only that, like customers like Google, their first assessment eventually is not from an infrastructure level. Actually, they start from the data hall planning, right? So the kind of deployment they're going to have in the data hall, that will dictate the deployment plan they're going ahead for the next 3, 5, or 10 years down the road. And inclusive of CDUs in the planning, logistics, like for example, we have a workshop with Meta, and they do have robots inside the data hall. And then we have to create that clearance pathway for that to adapt into our solutions. So with that, I think this is just the tip of the iceberg that I mentioned. There are a lot more. In the CD, there are 100 over items. In the BOD of ByteDance, there are more than 10 documentations of the BOD. And these are considered our onwards BOD that currently the PSG is working on, leading by Emmeline Salil and our consultant. In our customer perspective, I think this is what I learned. The value, the design with fungible, standardization across the platform that we have, and scalability. So the scalability is not just on the capacity, but the design change, how we can adapt to the change of future. I hate to say this, if we are not aligned with our customers, means we are not ready for tomorrow. Thank you.
Maybe just add on a bit on what Jess mentioned, right? So I think it's essential to keep our design fungible and flexible, even during the early stage, during the master planning stage. Because you know the internal layout of the building can change. However, the building footprint, it can't change. So because I think what we are seeing over the past few months is I think the technology is evolving. The requirement of customers constantly changing. What you're seeing like early last year's versus like late last year's can be completely different. You know, it get more dense, and then the network requirement getting more stringent, etc. So with that itself, I think it will better position ourselves, you know, to be able to capture and to be able to retrofit or fit to the customers that we are pursuing.
So I just want to add to what Jess said about the changing requirements of the customer. So probably if we go back about 3 years, like for example, the most stringent was probably Microsoft's requirement at the time, where they want 6 conduits on every riser and on every PoE. They want to reserve that for their own use. The last one we talked about in Bangkok, they're talking about 400,000 pairs of fiber between BKK1 and BKK2, which means we're going to upgrade the building PoEs, we're going to upgrade the risers, we're going to upgrade everything. We actually got to build 2 more skyways between the 2 buildings to lower that latency, right? Going down to the underground around the plot to the other building is too long of a latency for these guys, right? So the requirements are always changing, and we're working with everybody just to meet those changing requirements.
That's great insight, guys. Thank you. Let's shift gear to customer acquisition. Jess, maybe we can go back to you. Sales engineering, in a way, you guys integrate ops and design and legal and construction and it serves as a bridge between digital edge and the customer during the sales cycle. Talk to us about your sales engineering function. How has it been evolving?
Sure. I think the summary of what we are doing is that we are the bridge of every stakeholders within our organization and externals, I would say stakeholders like, for example, our partners, our customers, consultant, GC, and so on, and the supply chain. We have to recognize that our solution today to our customers is a combination of our effort, right? Our DE basis of design and integrated with our customers' requirement. And that's translate. We need to work very closely together from A to Z within our organization. We have to respect the BOD of ours with the intent that we have in day one, because this is what the certainty that we have designed. And we trust that with the BOD, we can commit on the delivery schedule and so on within time, cost, and resources, right? But however, we also need to have that flexibility to inject the customer's needs into it, right? To give you a perspective, we have a 3-day workshop with Google technical team in Korea like 2 weeks ago, right? And then it's a 3-day workshop. It's very intensive. And it is not just in between customers and digital age, but also the inclusiveness of our partners, our architects, our M&E consultant as well, right? So it was a great outcome. We did align that the expectation from our customers. And then right after, next week, I headed to India. And then we do have a similar opportunity and led by the similar Google technical team as well. And that's where I have shared what we have learned, what the lesson learned, and what are the pros and cons that, during the workshop itself. And that has translated and also to share with Salih and the team as well, and together with the consultant in India. So as you can see, these are the, I would say, the feedback loop that we have learned from our customers. We are not learning silently, right? We are learning from customers and we are applying everywhere within our organization. So this also want to shout out to Merv's teams, Yong Ho and Salil, everyone that working very closely with our customers, right? I do see that this is something that differentiates us outside of our competitive, markets outside there, is that we are not working silently. Every opportunities, every technical workshop that we have, we are working together regardless. And just like Jeff had mentioned earlier, like the F1 team, there's no one drivers that, leading the whole races, but with the group of team, the technicians, everyone, right, on the scene and behind the scene as well. And I wanted to emphasize that the collaborations, it's not just us, right? It's not just us within the room, but that's with our customers, our partners, like our GC, our consultant, supply chain, and many, many more. Lastly, I also want to end that for us to improve better for hyperscale solution team and the rest of the partners over here, we will introduce a change management framework that I will introduce during our workshop on the 3rd day. This actually to help us to, it's a tool, right? Help us to collaborate better, bridging the gap that we have, right? We can get the insight from our expertise, not just internally and externally as well, and to implementing solutions from the inputs that we've gathered. And that's ultimately the best, I would say, the comprehensive or optimized solution for our customers. I believe that this tools, or I would say framework itself, will bring more confidence, not just for our customers, but also internally within our organizations. Thank you.
Yeah, thanks, Jess. Maybe also a young way on the topic of delivery time. As we try to secure a customer contract, customer wants us faster. As we heard from Audrey, Stephanie, and Patrick, you guys have your own physical constraints, EHS requirement, cost requirements. How does your team try to navigate through this tension as we try to lock in a deal?
Yeah, I think we heard a lot today. Speed is everything. Time to market is everything. Customer wanted to know like how fast can they get to RFS. But at the same time, they're also mindful that whether those committed date that we provided to them is realistic. So from an engineering standpoint, at the inception stage of the projects, even during TDD and master plan stage itself, we are already mapping out the high-level market-specific schedules. So identifying all the key activities that's driving the RFS. Things like permitting timeline, power procurements, what kind of GC strategies that we're going to adopt, for the contracts. So, and because to the customers, they are also construction professionals, so they will be able to know that whether the dates that we are giving to them is realistic, and then what are the underlying risks. So it is important that during the engagement with customers, we are able to demonstrate that the dates that we are provided is realistic, achievable, and we have thought through the contingency, things like what are the fallback options that we can adopt in case of things slips unexpectedly, or how we're going to actively manage it. So this will give the customer the confidence that we know our stuff. The dates that we are giving to you is something that's achievable. To further support that, we have, like even in the most recent campus that we in Jakarta and Bangkok, we have adopted strategic approach, whereby for example things like for new campus or new land beyond for Gaia 2 and beyond, we are moving towards steel structures compared to RC structures. In general, steel structures, will help us to reduce the dependency on local labor force, and at the same time, it's also less impacted by weather. Largely because most of the things can be done in the factories, prefabricated, etc. And the other benefit is it is also lighter, which also help us to gain some speed in terms of piling progress. And we are also pushing, DFMA, off-site fabrication approach as much as we could. Things that we are already doing, like PTU, skid, package chillers, compact substations, prefabricated, piping modules to be done in the factories, so that we can reduce the on-site construction time, at the same time to improve the overall quality. Then in some markets like Thailand and Indonesia, where we need to gain more speed to stay competitive against our friendly competitors, and when land is not an issue, we are eliminating away the basements. So by eliminating basements, it helps to reduce the amount of excavation we need under the DC buildings. And we also remove the dependency of the superstructures, based on the basement progress. That helps to de-risk the overall schedules and make it more predictable in terms of the delivery timelines. Last but not the least, I think earlier, we also talked about standardization, repeatabilities, things like standard data hall, standard power block size, and so that helps to reduce the re-engineering efforts, and at the same time, make delivery and performance more predictable. So in summaries, right, I think what we need to demonstrate, it is very important that during the customer acquisition phase, right, we are able to give the level of confidence to customers that we are presenting a robust delivery plan that can be achieved.
Yeah, I think construction timelines, and Yongwei, we've been speaking a lot about this in some of our bank processes over the last couple of weeks. Like, obviously critical for the customer conversations and sort of whatnot, but certainly from a funding perspective as well. We sign up to some pretty short sort of customer timelines, and we need to be able to demonstrate to banks that this is achievable. So Yongwei's been a big help at the moment in our CGK1 debt process, explaining to these banks the modular designs and construction processes and sort of whatnot.
And while Yongwei is designing the data center and Ben is finding the money, we actually start talking to the carriers at that particular time, introducing them to the project, making sure that our site is included in the master plan. So when they, build out the network into the areas that we're in, we'll have the correct manholes near the right points of entries to serve our customer needs. So,
I think Yaniv touched on this quite a bit as well, but obviously under the customer contracts, we've got some fairly steep penalties when we don't hit our timelines as well. And look, as much as we try to sort of mitigate that, and Patrick does through GC contracts and LDs and sort of whatnot, that is a big liability and sort of one that we need to be very rock solid on.
Yeah, no, thanks, guys. And I think Ben, you touched upon customer contracts, so let's shift gears to that. So, Patrick, you have negotiated with all of our hyperscale customers the last 2 years. I dare to say you have turned from a grumpy construction lawyer to a smooth talker customer lawyer. So, well done with that transition.
Grumpy on both, but sure.
Talk to us about the dynamics of negotiating with the largest companies on this planet, which have a lot of bargaining power. What kind of are the 5-7 clauses we care about the most, and how do you go about trying to win those in the negotiations?
Yeah, well, I think that that's the key point, that we have a limited number of customers in the hyperscale space, and all of them are very large and very powerful in their space. So they want what they want, and they have a very defined sense of how they want the contracts to go. The negotiations, because of that, this can be long and include many rounds of exchanges to get to a position that we can live with. But as you say, to do that, we generally have to identify what are our key showstoppers, our 5 or 7 points that are critically important for us to be able to go forward with the particular customer contract. And just to identify a few of those, the immediate important one is the treatment of liability generally. How liability is capped, what is included and what is excluded from the cap, and how the level of exposure we have in the event that things go, catastrophically wrong under a particular contract. Historically, we've prior to the larger contracts that we've been doing, we've sat at total contract value as an appropriate liability cap. But given the sort of the size of the deals that we're now looking at, we are really pushing importantly to get that down and looking at 1 year, 2 years, 5 years MRC. And certainly as we have developed our position in the market and got better relationships with the individual hyperscale customers, we've been able to more successfully get an appropriate cap on liability to satisfy ourselves and our stakeholders that this is a risk that is worth taking for the available return. Related to that is what is carved out of that liability cap, and as we go into the AI era and the GPUs that have been brought into our data centers are becoming, they're increasingly valuable. These are really high value chips. We're seeing from our customers a real attempt to push that outside of the liability cap and make our exposure unlimited on customer property damage. And again, this is something that just represents a potential company risking event to the platform, and as such, it is one of those items that we need to really push on. The next sort of key point that always comes up and is critical for both us and for our customers is change of control and assignment of rights to the contract, to the property on which the data center sits and to the data center itself. This is relevant both from a monetization event perspective as we move towards what our key investor Stonepeak will want to do with the platform in the future, but also, as Ben I think is going to speak about shortly, the ability to get debt financing into the projects to be able to deliver to the projects. So we need to have as much flexibility as we can obtain with respect to our ability to transfer both our assets, ownership in the platform, and rights in the contract itself. This sees a lot of quite detailed negotiation with all sorts of jimmied solutions. We've got blacklists as to who we can work with, whitelists as to who we can work with, requirements that whoever we deal with or transfer rights to is of appropriate financial strength, has an appropriate background in the data center industry, is not owned by foreign government entities. These clauses go on for quite a long time and are very heavily negotiated. So the third point that I'd want to touch on is the scope and breadth of termination rights within the contract. Again, this is relevant to Quentin in terms of the value of the contract itself, to Ben as he seeks to secure debt on the back of our contracts. But we need a high degree of certainty that the customer is not going to be able to walk out of the contract on a small event or a small negative outcome. And if they do wish to remove themselves from the contract, that they're required to pay a very significant portion of what would have been received but for them coming out of the contract. And if we can't get that sort of certainty, then that's going to really undermine our ability to fund the project and also the valuation of the potential return from it. The fourth point, I think, generally would be, it's a bit of everything, but it is the service level agreements, the demarcation, and the description of responsibility of what we are actually going to deliver. We need to make sure that the contract reflects acceptable risks on the SLA side. Again, getting caps in there where appropriate, making sure that our service levels are items that we can deliver to, making sure that we're properly resourced to take on the level of risk that we are accepting in terms of our service levels. And so that takes a lot of work with Jess and the rest of the team to make sure we are matched across the various teams. One thing there is that, as the contract comes together, there are many different documents that go into the contract and they can be contradictory. So there needs to be a discussion between the different teams to ensure that if they've put in a deviation or an exception or whatever it may be, that deviation or exception comes in at the right level of the contract and overrides whatever other criteria that might be in there. We've had a number of circumstances where we thought we were protected, but the deviation ranked lower than the other requirement, and as such, we were still exposed. So that's a really difficult exercise to make clear. I think I'll stop there. But those are the things that immediately come to mind and need to be dealt with. And over the last 2 years, we've had many discussions with all of the different hyperscalers. They all have different pain points. They all have different things that they emphasise, and learning what's important to them and how to manoeuvre within their teams and give them solutions that will protect us, but leave them feeling satisfied is a big part of the process.
Great. Thanks for this, Patrick. Maybe last question before we run out of time. Ben, over to you. In terms of when we secure the customer contract, and hopefully it's a solid contract, you all go about, finance goes about raising 70% of the capital through the debt market. You guys have a couple of hundreds of millions of dollars processes going on right now. How do you go about raising so much capital in a short time frame to support the construction?
So I guess just taking a little bit of a step back. So I guess in terms of our capital stack or how we sort of fund the business. So we've got a very sort of healthy sort of 1.66 billion equity commitment from Stonepeak. On top of that, across the course of this year, you'll probably hear the term sort of holdco debt coming up quite a bit, and so that'll help support that. But you're right, Yaniv. I would say the bulk of our financing across the group is at an asset level, project financing, where we'll look to secure debt between sort of 70 to 75% of sort of loan to cost, or LTC. Those processes, these are we're dealing with a mix of domestic and international banks, and the international banks in particular are they're very sort of astute investors. So they're very across the data center industry. They're very across the sort of the key hot topics. Patrick touched on a lot of the terms in the customer contract that we focus on as share equity holders, as shareholders or operators. Equally, vitally important for debt providers. They're very attuned to what sort of market norms around terminations for convenience and sort of whatnot. It's not simply just term of the contract and MRC. I guess we're seeing a few new developments as we're sort of having more and more sort of these installation capexes, so having to sort of shift a little bit as we're shift our financing sort of structure and approach. But in a sense, we're dealing with a bunch of very sort of sophisticated banks. It's a process that we look to run sort of relatively quickly. We have to do legal diligences, technical diligences, financial diligences, commercial diligences to support these processes. So certainly as we're sort of looking to raise this debt, having a lot of touch points, a lot of support from everyone in this in this room. And I guess the last one really is all these finances are just getting bigger and bigger, right? So I think across the last week, we just launched a sort of an $830 million US financing for BKK1 and 2, right? Andrew and June sort of closed an 800 billion Korean won facility for SEL2 and 3. We've got almost $650 million facility. We're looking to raise in Indonesia. So. There's a fair bit of work sort of involved and a lot of touch points and support from everyone in this room is how we get it done quickly. But the base of it is really all the commercial work, all the technical work that the team's done to secure the site, to secure the customer contract, etc. So.
Great. Thanks, Ben. I think we have run out of time, so hopefully that gave the audience insight on how we go about site acquisition, site selection, and customer acquisition. The next phase is naturally actual construction. Mervyn has a long session later this afternoon. We'll take you through that. With that, thank you very much.
Thank you, everyone. We have changed the schedule a little bit. We'll have a coffee break till 3 p.m. And after that, we'll have B-Green session, then country sales session.